Ladies and gentlemen, good day and welcome to IRFC's Q4 FY24 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanket Chheda from DAM Capital Advisors. Thank you and over to you, sir.
Yeah, hello and very good afternoon to all of you. We have with us the entire senior management of IRFC to discuss their Q4 earnings and this strategy from here on. From the management, we have Ms. Uma Randade, who is MD and CEO, Ms. Shelly Verma, who is Director of Finance, and Mr. Sunil Kumar Goyal, who is the CFO. Without further ado, I'll hand the call over to Ms. Uma Randade for opening remarks. We will follow it up with Q&As. So over to you, ma'am.
Good afternoon, everyone. I welcome all of you to this conference call, and I would also like to thank DAM Capital for organizing this call. Now, as you all know, we had declared our audited financial results for the financial year 2024 on the 20th of May. And this call has been organized to share the company's performance for the year. We had already circulated our investor presentation. I'm sure you would have all received it by now and seen it. As you are aware, IRFC plays a strategic role as the sole market borrowing arm of the Indian Railways. IRFC has been consistently supporting railways capex funding, both for rolling stock and other infra projects with extra budgetary resources. As we all know, railways capex has been increasing over the years with a focus on infrastructure, capacity enhancement, decongestion of high-density networks, passenger experience, safety requirements of its network, etc. Achieving reduction in logistic costs in the country, enhancing safety of passengers, these remain the priority areas of the government. Gross budgetary support has been kept at 2,52,000 crore for capital expenditure for railways in the interim budget of the financial year 2024-25. Major part of the planned capex is directed towards implementation of major economic corridors, namely for energy, mineral and cement, the energy, mineral and cement corridors, port connectivity and high traffic density corridors. These railway corridor programs have been identified and will enable multimodal connectivity. While energy, mineral and cement corridors will help to reduce air pollution, pollution on the roads and ensure reduction in the cost of logistics, corridors for the port connectivity will provide seamless connectivity to the ports through the railways in a multimodal approach. There is also corridors planned to reduce the burden on the high-density traffic routes. Overall, through these corridors, about 40,000 kilometers of new track is likely to be laid over the next 6 to 8 years, which will significantly increase the railway capacity and reiterate the railway's commitment towards sustained development by reducing carbon emissions. These programs will also help to contribute to economic growth, accelerate GDP growth, reduce logistic costs for the nation, and improve passenger experience. There is also a plan to convert rail bogies to Vande Bharat standards. That is also being planned. There is also a plan to start to use part of the funding for modern Vande Bharat trains and deploying automated train safety technology across the Indian Railway network. The capex funding of the Indian Railways is primarily funded by the budgetary support and extra budgetary sources which include IRFC borrowings. From financial year 21-22, budgetary support for the Indian Railways has increased tremendously and correspondingly extra budgetary resources have been scaled back. In the financial year 2024, there was no requirement for extra budgetary resources to the railways due to the high budgetary support and thus there was no funding done by IRFC. Although in the interim budget for the financial year 25, there is no EBR requirement from IRFC. However, the final budget for 25 is yet to be placed in Parliament and passed. IRFC mandate also covers financing for projects with backward and forward linkages with the railways. Accordingly, we are actively looking at funding such projects in the railway ecosystem, apart from funding of the Indian Railways, and exploring opportunities in collaboration with other infrastructure lenders. Now I will request our Director of Finance to take you through investor presentation and share the financial highlights for the financial year 2024 before we move on to the question and answer session. Over to you here.
Thank you, ma'am. Good afternoon, everyone. I'll begin with a brief snapshot of the company. IRFC, as you know, is a systemically important infrastructure finance company with major shareholding by Government of India through Ministry of Railways. The current equity stake by the government is 86.36%. IRFC is a dedicated financier for Indian Railways, as we have mentioned, and entire financing to Indian Railways is through finance lease model, both for rolling stock and infrastructure projects. It's a low-risk, cost-plus model as all the costs incidental to borrowing, including hedging and currency risk and interest rate risks, are passed through, and we are getting a consistent margin over the years. Margin for rolling stock is 40 bps and it is 35 bps for projects. This margin is added to weighted average cost of funds raised during the year to work out lease rentals. Total lease period is 30 years. For rolling stock, this lease period is split between primary lease period of 15 years and secondary lease period of another 15 years. And during primary lease period, we recover all our investments, and only nominal rent is paid during the secondary lease period. For projects, the rentals start after a moratorium period of 5 years, and the primary lease period is 15 years, secondary lease period is 10 years. IRFC has been giving consistent financial performance over the years. We have highest domestic credit rating of AAA by CRISIL, ICRA, and CARE, and our international rating is at par with sovereign. Our assets under management as on 31st March 24 stands at 4.64 lakh crore, and 98.94% of this AUM is for exposure to Indian Railways. And if you see the breakup of this AUM, 35.52% is for rolling stock lease receivables, 20.37% for project lease receivables, and 43.05% for advance against infra projects for which we are yet to sign the lease agreement. And 1.06% is for our loan to RVNL. Net worth of the company has grown to around 49,178 crores as on 31st March. Our revenue for the year is 26,644.58 crore as compared to 23,721.42 crore in the previous year. During the year, we have signed lease agreements for projects funded in FY2023 after the completion of moratorium period. Our profit for the year is 6,412.10 crores as compared to restated profit of rupees 6,167.20 crore for previous year. Our total borrowing as on 31st March 24 stands at 4,12,032.10 crores. And in order to keep the borrowing cost competitive, we raised funds from various sources like taxable bonds from domestic market, rupee term loan, ECB, 54DC bonds. If you see the borrowing mix as on 31st March, after total borrowing, our bonds including 54DC bonds are at 48.02%, rupee term loan at 30.60%, and ECB at 16.71%. And borrowing from NSSF is 4.25%. And we maintain a very strong ALM by raising funds for long tenor in line with the tenor of our assets. The weighted tenor of our assets is 8.6 years, and weighted tenor of our liability is 7.4 years. Our operating expenses are quite low, about 0.09% of total income, which is one of the lowest in the industry. Our gearing ratio as on 31st March is 8.38. And capital adequacy is quite high due to our major exposure being to sovereign at 616%. Coming to our return ratio, our return on equity for the year is 13.66%, return on assets 1.31%, our net interest margin is at 1.38%, and earnings per share 4.91. During the year, we have done a certain restatement of lease receivables amounting to about 790.14 crores, which was basically due to short accounting of against capital recoveries in the terminal year for the lease agreements which have completed their transit lease period. Out of this amount, 620.28 crore has been restated in the lease receivables and net worth as on 1st April 22, and there is an impact about 169.86 crores in the corresponding previous year, that is FY2022-23. As our CMD has mentioned, we are actively exploring funding for projects in the existing mandate like leasing of rolling stock other than MOR, funding of railway infrastructure being developed through state JV, upcoming dedicated state lines, multimodal logistic parks, non-conventional sources of energy, including renewable energy for railway network. We are in discussion with various other infra financials for co-funding opportunities. And internally also we have taken a lot of steps like combination of board-approved credit policy to manage credit risk and ensure that the credit extended is in line with the company's risk appetite and the credit standard that we have been maintaining over the years. This will help IRFC maintain a healthy loan portfolio and minimize the business risk. Setting up credit we have set up internal credit committees. We have onboarded certain agencies for financial appraisal, technical appraisal, and also for the legal due diligence. Our board has recommended final dividend of 0.70 per equity share for FY24, which is subject to approval of our shareholders in AGM. This is in addition to interim dividend of 0.80 rupees per equity share. So the total dividend for FY23-24 is 1.50 per share. That is all from our side. Now we are open to questions from the participants.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Kaustav Datta, individual investor. Please go ahead.
All right. Am I audible to everyone?
Yes, sir, you are.
Excellent. Thank you. My question is regarding the extra budgetary resources. And, I'm a recent investor and I'm understanding it in this way that, without that EBR, the growth will be kind of restricted, right? So, and I'm sure you would be, you mentioned about linkages, forward and backward linkages with railway. That is an option before you, and I think you've adjusted your charter to that extent, and you are permitted to do that. Earlier, it was kind of restricted. So, is that all, or you are thinking of other avenues to fund growth? You mentioned about 50,000 crore as a market borrowing plan for FY25. But I'm trying to understand a bit more about this EBR, the relationship of growth with EBR, because I think this is directly linked. So how can you de-risk yourself from that?
Well, to begin with, the trends will continue in the next couple of years, because if we are talking about the Indian Railways, then we have lent them a lot of money in the past, and right now we are still executing the lease agreements with them with regard to the project assets. So for the next couple of years, there should be no problem at all whatsoever, even though the EBR component will reduce. Secondly, right now it has to also be understood that there is an on-account budget. There is a huge investment being made by the railway sector, and a huge infrastructure push is being given by the Indian government. And therefore, we will have to wait until the budget is passed properly. And right now, as I said, we are still in the interim budget stage. So let's see, the path will be clearer once the budget is passed.
And what's the... Sorry to interrupt you. Finish it off, please. Thank you.
Yeah. The point is that, yes, since there is, the extra budgetary resources are seeming to be coming down, we are looking at the forward and backward linkages and are actively in discussion and talks in trying to see where we can lend further. And in addition, we are using this interval period. As I said, for the next 2 years, there should be absolutely no hiccup along the way. And we are using this time productively to make sure that we get further businesses and also strengthen our own internal mechanisms so that we do a proper appraisal of the businesses that do come our way or the opportunities that we do see, the opportunities that we do want to take on. So that is the preparation and a way forward.
So what, as per your initial estimate, would be the opportunity through the, the forward and backward linkages? Can you share some ballpark, number?
Right now, we are still in the middle of, we are still at the preparatory stage. So it would be difficult to share any kind of ballpark numbers, but the forward and backward linkages are many. There are several areas that we can look into. So that is right now ongoing.
All right. And you mentioned about the lease agreement. The 2 years we are safe, but does that mean there would be some kind of growth as well, which those are incremental ones coming for FY25 and 26?
No, that is exactly what we are working on because we have a period of about 2 years to get that thing in place.
Okay.
As I said, for right now, our financials are very robust and will continue like this for the next 2 years. And this is the time and the opportunity for us to make sure that we diversify our businesses so that we can sustain it beyond that period as well, which is actively going on.
All right. Thanks. I'll get back to the queue. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Prakriti Banka from HSBC. Please go ahead.
Yeah, hi. Thank you. I just wanted to know what was your disbursement as of the end of this year?
Prakriti, sorry, your voice is coming muffled. Can you speak through the handset?
Yeah, just one second. Can you hear me better now?
No, it's still a little muffled.
Any better?
Yeah, thank you.
Yeah. So, I just wanted to know what was the disbursement for the full year?
In previous, the year 23-24, there was a disbursement because as you know, the extra the funding was done entirely by budgetary support.
Right. So when you say that you have these leases which you are yet to execute,
I'm sorry, that was not very clear. Can you just repeat?
Sorry. Yeah. So I said when you say that you have these
sorry to
leases.
interrupt you. Your voice is coming very much muffled.
Just one moment, please.
Yes.
Is it any better?
Yeah, it's better now.
Yeah. So I was saying that when you said that, you have leases which are left to be executed going ahead, will this entail disbursement? I don't quite understand when you said that for the next couple of years you do not, even if there is no EBR that is required, you won't really have trouble. So can you just explain that a little, please?
Yeah, basically in IRFC has a leasing financial model, and what happens is when we lease out the rolling stock or whatever it is to the Indian Railways, there is a moratorium period of before which Indian Railways starts paying us back. And since we've been lending enormous sums of money over the past so many years to the Indian Railways, some of those moratorium periods are coming to an end and we are signing those lease agreements now. So as I said, that inflow continues to be robust and will continue to come in, and we are okay in this manner for the next 2 to 3 years at least. It is therefore imperative, and that is the aim of this company, that we use this period to build our own internal structures and mechanisms so that we can properly assess other business opportunities and go in for those business opportunities in a possible scenario where the lending to the Indian Railways may dry up. We are fully aware and seized of this, and we are using this period to strengthen our own mechanism so that we can diversify in a safe and profitable manner.
Understood. So basically, what you mean is that now you will start receiving, there will be a payback that is happening, and you are now sort of looking for opportunities where you could be deploying this money. Right.
Absolutely.
Okay.
The point is, at this point, we are looking to diversify, and
Sure.
we are able to do that in a proper manner because we have the a period of 2 years in which to properly plan and to properly implement and to properly increase our own mechanisms so that we can do a proper
Right.
so that we can the business goes on, it's business as usual after the next
Right.
couple of years.
Right. In terms of, if you are then looking to diversify into, say, other infrastructure areas, like you did mention that you will probably tie up with, other infrastructure finance companies. I mean, have you sort of onboarded some kind of team already for that, or is this still at the drawing board?
No, we have got a team in place, but it does have to be strengthened. And certainly we are in talks with certain companies so that we can, take this forward. And as I said, in any case, the company already has a charter that we can fund, we can fund entities with any backward or forward linkages with the Indian Railways. And there are several sectors over there, including, other than the leasing of rolling stock to MOR, we can lease rolling stock to other people. We can fund railway infrastructure which is being developed through state JVs. Then there are all kinds of other multimodal logistic parks that are coming up. Non-conventional sources of energy are there, including renewable energy for the rail network. So the business opportunities are diverse and large, especially in the background of a tremendous infrastructure thrust by the government of India, all of which are being pursued by us.
Right. But like you mentioned that, the size of the opportunity is not something that you could outline right now, ballpark maybe?
No, I would not like to give a ballpark right now because we're using this time to get everything together. But as I said, we do have enough time and enough opportunity to make sure that our revenues continue to be robust.
Right. And just in terms of when, sort of the kind of time you did mention, you have 2 years to execute this.
Yes.
But, when we can start seeing some sort of sanctions in these, various opportunities, when do you have some sort of a timeline for that?
I think the timeline essentially is that we have to have something in place over the next 2 years. And, going forward, probably within this year, we might be able to get some progress. But we will have to wait and see because, as I said, it is also contingent to a very large portion on the final budget being passed. Because at this point, as I said, it's still an interim budget. And the kind of infrastructure development that is going on in the railways and the kind of capex expenditure that is there, the capability of the Indian Railways to absorb capex is tremendous. So even at this point, to rule out the possibility of lendings to Indian Railways, we cannot rule that out at this point either.
Sure. Just one last question to me. Just with respect to spreads, I mean, they've been quite stable now, but do you see any scope, for them to move either way?
I'll just hand that over to DS Finance. If you can repeat the question, please.
Right. So I'm saying the spreads that you charge over your cost of funds, they've been quite stable for a few years now. Is there any, possibility of this moving either way in the next year or so?
See, our for as I mentioned, for the rolling stock and project have been consistent. So we don't see any, one thing which we have to appreciate that apart from this spread, our risk, our risk with respect to currency or interest rates are also passed on to. So in this background, I don't see any requirement of change in spread. So this will continue.
Okay.
They are the same for the past 4-5 years. So I don't see any requirement of changing the spread.
Got it. Okay. Thank you very much.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Ritika Dua from Bandhan AMC. Please go ahead.
Yeah, ma'am. Thank you for the opportunity.
Just some follow-ups. So the previous question, like in how you alluded at the start, that you have 2 years to firm up the plan on the future growth. When you say 2 years, are you largely referring to this because of the disbursements that you did in FY20 and 21, which were quite healthy, and which would now start? Are these two the years which will now start? The moratorium would be over, and that's how the you have 2 more years to plan because the earnings from these would start flowing now more into the P&L. Is that the right understanding?
Yes, the understanding is that because of the moratorium period, the Indian Railways only starts the payments to us after a 5-year period. So, in fact, the lending that we have done in 17-18,
Sure.
that is now going to start and bear fruit. And therefore, when we see that we had the lending to the Indian Railways in the year 23-24 had dried up, that effect will not be perceived immediately because we've already got a lot of our investments in the pipeline, which are now going to start yielding fruit. And as you know, prior to 21-22, we had extremely healthy lendings to the Indian Railways. So this, as I said, that is the reason why we have this time to plan and make sure that we strategically broaden our financing portfolio.
Sure, ma'am. So just to follow up on this, ma'am. So when I actually just look at just the annual numbers here,
Yes.
When I actually see the NII, the net interest income for 22, 23, 24 were pretty much similar on an absolute basis. A
Yes.
very similar trend was seen in 18, 19, 20. So
Yes.
can we just assume that once 25, 26, and you are able to bear the fruit of the lending done from 17 onwards, would
Yes.
the absolute in 25, 26 show a considerable jump?
I don't
Absolute
think
NII growth, can it be very sharper, or at least can there be a growth, because it's been pretty flattish in 22, 23, 24. Now that the moratorium is over.
Well, there may not be a very sharp jump, but certainly there is not going to be any kind of sharp decline either. And to a very large extent, as I said, we are also exploring other opportunities. But I'll also ask my BS to add to this.
See, if you see our accounting model, see what happens when we are during the moratorium period, when we make a disbursement, we just take the margin in our bottom line. We directly consider the margin. But during this moratorium period, we keep on capitalizing the interest, which adds to. That's the reason you must have seen that although there has been no incremental disbursement during 23-24, but there has been hardly any impact on my AUM. It has gone down only by 2,000 crores because we have capitalized the interest on the previous disbursements for a project asset for which the agreements are not yet signed, and there's a capital recovery which is coming. So it in a way balances off. So what we are saying, till the time we sign all the agreements, there is a interest capitalization amount which adds to my AUM.
So actually, what will happen in the maybe after 24, the leasing would start converting into the advances, and so that's why I was just trying to understand, would the NII accretion coming 25, 26, could we see a growth in the NII? Is what I'm trying to understand. On an absolute basis, this 6,400 crore number roughly, which has been in a ballpark of 6,200 to 6,400 for the last 3 years. In FY25-26, now that you would start booking them as advances, would the NII see a growth, or we can at best expect another 6,400 ballpark kind of a NII in 25-26 basis?
Basically, we are following a leasing model. We have 2 kind of assets. One is the rolling stock asset, and another is the project asset. And in case of a project assets, we are executing the lease agreement after a moratorium period of around 5 years. And once the lease agreement gets signed, we are accounting these assets as per the Ind AS 116. And before signing of the agreement, we actually whatever disbursement happened to the Indian Railway will recognize as income only for our margin portion. That is the net cost of lending and borrowing. And after execution of the lease agreement, we'll account for the lease rental, which includes margin as well as my cost of lending. So after execution of the lease agreement, there will be a increase in the top line as well as in the finance cost. but the net accretion to the NNI would remain same. As long as my AUM is not increasing, I think our net accretion would be at the same level which I had in the 23-24. I think over the next few years, as Madam has explained, that we have approximately as of now, we have a balance of around 2 trillion over for funding for this project asset. And over the few years, we will be executing the lease agreement for these assets. Till the time we'll execute the lease agreement, whatever debt servicing will do, that will add to my future years AUM, and whatever capital recovery I am getting against agreement which I have already signed. So that will be a compensating kind of a thing, and my AUM would be at a same level. Accordingly, net accretion to the NAI would be to the extent only whatever fund I am redeploying into the business. That will be limited to that extent.
Thank you so much, sir. Very clear, sir. Thank you so much. If I could maybe just ask two more questions. One is that on the new ventures that ma'am was sharing at the start, so is the understanding correct that even the new ventures would be more aligned to the railway sector? So even if you're talking renewables, you're talking about renewables as a source only to be deployed in the railway sector. You're not talking about renewables in general. So that's one clarification I just wanted to check on.
Yes, actually my current charter permits me only to fund projects which have a backward and forward linkage with railways. So when we talk about these renewable projects, as of now, we are talking only about projects which have a linkage with the railway. We are not talking about entire other renewable projects.
And ma'am, any views around that, we're discussing with the ministry to actually, expand our, scope of the, funding in terms of maybe getting a new MOU signed or something like that? Can that be a possibility, looking at how the other, PSU, NBFCs have been expanding into other infra and allied opportunities?
Yes, that would be one of the possibilities that we will be pursuing to expand our charter. But the point is that even that, as I said, we will be pursuing. But even without that, the forward and backward linkages with the railways itself throws up so much opportunity in the infrastructure sector. So I don't think there should be any really big issue on trying to even expand that further, because we have a lot of opportunity within the backward and forward linkages itself.
Sure. And then just one last question, just a link to this one. So if once you, on the new ventures that you are alluding to, what we have seen earlier, that your spreads have been pretty much stable and sort of maybe capped, if that is the right way to put it. But in the newer ventures, could there be a scope of actually doing it at a better spread, or do you think that the spread would be the same?
For the new venture, it is not linked to our funding to MOI. Those spreads will be purely dependent upon the credit profile of the project and the numbers that is shown on based on the due diligence. There will not be any regulated framework or any linkage with the MOR funding. Those will be purely based on the industry standards.
So fair to say it could be higher actually?
It could be higher. Definitely it could be higher.
But from any ballpark there, that like what are really like, when you are evaluating today, what are the spreads if you look to maybe do?
No, I think it will be too premature to give any spreads at this stage unless we have started funding the project and we can give you the numbers on the first is to give the numbers on the project.
Right, ma'am, thank you so much. Thank you. Those are my questions. Yeah.
Thank you very much. Participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Next follow-up question is from the line of Kaustav Datta, individual investor. Please go ahead.
Yeah, just a quick question around your 50,000 crore borrowing for FY25. Can you talk a bit about that, please? Because you're saying you're not having extra budgetary resource requirement, but still you're borrowing. Can you explain that a bit more, please?
See, as we have mentioned that this is only based on the interim budget and final budget is yet to be approved. So based on our internal assessment, we have taken this approval from board for 50,000 crores. We will take care of any disbursement which may come up during the year, my committed liabilities, and we are also exploring a lot of refinancing opportunities. So whatever funds would be required for refinancing, this borrowing will be used for the refinancing.
Got it. Thanks.
Thank you very much. Participants, you may press star and 1 to ask the question. Ladies and gentlemen, you may press star and 1 to ask the question. Participants, as there are no further questions, I now hand the conference over to the management for closing comments.
Thank you so much. We want to thank all the participants for attending this call. We hope that we were able to answer your queries, but still if you need some more information or details or data points, you can always get in touch with our investor cell and any of us, and we'll be more than happy to answer your queries. Thank you so much.
Thank you very much. On behalf of DAM Capital Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.